Hello and welcome to this week's video featuring yours truly, Mike Wade and Tom's Tools. Let's get to the disclaimers. Stock and options trading has large potential rewards but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. Don't trade money you cannot afford to lose. Remember, I'm not an advisor. Please don't construe anything I'm about to share with you as advice. All prices are in US dollars unless noted otherwise, and please feel free to read the balance of the disclaimer by pausing the recording. All right, let's talk about moving averages. So trading is about picking direction sometimes it's not, but if you're picking direction, it's really a good idea to have some tools or some indicators. A lot of my videos recently have been talking about using indicators, and one simple indicator are moving averages. So on the chart here, this is Amazon, a recent chart of Amazon. And what you can see here are the 50-day and 200-day moving averages. So what is a 50-day average? Well, it takes, for example, right here, it takes the average closing prices over the preceding 50 days and creates a dot. And then these dots are created and joined in succession, creating a moving average. And so what we can do with them is sort of get a general feel for how the stock is performing. All right, so notice the 50-day average, which is brown, compared to the 200-day moving average, which is magenta. You can see that the 50 moves faster or squiggles more than the 200-day moving average. All right, so these things lag. How does the 50-day moving average lag? Well, it lags by 50 days. 200 by 200 days. So what's the purpose of that? Well, you can use them as triggers. So for example, when the stock closes below the 50, you may choose to sell. When the stock closes below the 200, you may also wish to sell. You can even use the crosses to tell you that some bearishness is happening. And notice here that the 50 crosses below the 200-day moving average about, well over a month after the bearishness started in the market. So these 50 and 200-day moving averages are very valuable, but they're really not that great at detecting when it's time to go long or short. Two moving averages that are, however, are the 10 and 30 moving averages. So I want to introduce to you a system called the 10-30 moving average crossover system. First off, let's talk about the moving averages. The purple one in this case, the magenta one, is the 10-day moving average. And notice how it pretty closely follows the movement of the stock. It squiggles more. It only lags by about 10 days, right? The 30-day average squiggles less, but a lot more than the 50 or 200 did. So what we can do with these is, looking at a 10-day view and a 30-day view, is we can build a system that tells us when to get in and when to get out based on when these lines cross. For example, when the shorter term average, the 10 in this case, crosses above the 30-day moving average, which is the brown line, that would signify a bullish entry. That actually happened right here where you see the arrow. That was our bullish cross. All right, so the idea of the system is you get in on a bullish cross, you go long, you buy calls, you buy stock. Anyway, you go bullish, and then you exit when the stock crosses beneath not the stock, but the 10-day average crosses beneath the 30-day average. So imagine had you gotten in at roughly 1450 on Amazon here, and then out here, and the stock actually closed right around 1900. That's a 450 point move that you would have captured had you traded this system. All right, so this system has a couple of things to note. So first off, it works well on stocks that do these big sustained high momentum moves. So it doesn't work on stocks that some of the Dow stocks that are kind of floating and moving average. You want big moving stocks. I'm going to show you how to find them. All right, and secondly, you can get some chop, as you see here, and in the choppy times, it doesn't work. So the way the system works is by capturing some of these long-term moves and then dealing with the occasional choppy crosses. So it's a really straightforward system. Just to recap, you get in at the, in this case, as the 10-day moving average crosses above the 30, and then out when the opposite happens. You can see there that was our 450 point gain. Now it gets better, so you can continue to use the system. So when we get our bearish cross up top here, that would also, in addition to signifying a bullish exit, it would also signify a bearish entry. So we would have gotten out of this long, successful 450-point trade and then into another. We would have entered bearishly, maybe buy puts, and then we exit on the opposite cross down here, and we would have ended up with roughly, what's that, 1900 down to 1700. That's a 200-point gain in the position, in the stock price, and then of course the puts would have done quite well in that market. So that's the 1030 cross. It is more accurate than the 5200. It isn't always going to give you great results, but really it's about catching the long runs. All right. So in this video, I'm going to show you how to use Tom's tools to accomplish the system, and we're going to be using two tools. We're going to be using the average true range ranker to identify the biggest movers, the big boys, the ones that take big moves, sustained moves. We want to find those. And then we want to scan for, and take those stocks that move the most, and then take them into the moving average scanner, which will help us identify the 1030 crossover. So the scanners, Tom's tools, will do all the work for us. Last step is to take a look at how we trade this with options, and I've got a slide to show you there. Let's hop into the tools and get rolling. All right, now first off, I've back tested to January the 2nd, 2018. I want to show you how well this works. And the first step is to find the biggest moving stocks. So I'm going to go to Stocks and Stock Rankers, and I come down and I find Average True Range. All right. Now let's just go off and find the stocks that have the highest average true range. And I'm going to start with the S&P 500. Feel free to use any index, but because the S&P 500 stocks actually have a lot of institutional sponsorship, there's a lot of power to sustain the long runs that make this system work. So really simply, S&P 500, highest ATR, and hit your search button. Again, what we're after are the biggest moving, most volatile stocks with the highest average true range. All right, and you'll see here that a bunch of them came up. You can see them listed. You can see the actual latest range, etc. And all I want to do is take the top 100. You can do top 50 if you like, if you want to go after the best of the best. I'm going to take the top 100 and replace them into my stock list by clicking replace, and I'm going to use that list to go find those that are running or having a 1030 cross. So how do I do that? Well, you go to Stocks, Stock Ranker, and then Moving Averages. All right, so remember we're doing the 1030 crossover, so make sure that we set those moving averages appropriately. If you don't see the wizard criteria up here, then come down here where it says wizard criteria, click the show button, and then just make sure that you have 10 for the short moving average and 30 for the long. And then notice there's a lot of settings here. I'm not going to cover all of this in this video. Feel free to hit the help button if you want to see the details of all of these. Obviously we can look for bullish, moving average crossovers, bearish. We can get a list with the least number of days since the crosses for both bullish and bearish. We can look for the most days since the cross. We can also look for differences between the two, the highest and the lowest, if you want to detect as the lines are moving closer or further apart. For this one, I'm going to look for the most recent bullish crossovers, so I'll select least days since latest bullish moving average crossover. All right, so that's step two. The next thing we want to do is use that My Stock List that we just created. Remember, My Stock List contains the list of the biggest average true range stocks, the big boys, the big movers. I want to scan against that. So we'll look for 1030 crosses of those stocks that were identified in the prior step by using My Stock List. Hit your search button, and you'll see a number of them come up here. And then all we need to do really is to move through the list. And notice that there's a couple already. Some of them you may even recognize, like Netflix. I love Netflix. I used it as an example earlier. Let's go ahead and pull up a chart on Netflix, and let's see what it was doing on January the 1st, 2018, or January the 2nd, 2018. And you can see that the system detected, the scanner detected this bullish cross right there. Our entry would have been right at the close, somewhere around 200. So that would be our entry, maybe buy some call options. I'll talk more about that in just a second. And then had you followed this trade, entered on January the 2nd, and stayed in it for right around 3 months, when we got the opposite cross, notice that we exited this trade right at 280. So we got in at roughly 200 right here, and we got out at 280 right there. Just based on the moving average crosses, that's an 80-point run on a 200-point stock, which would equate to roughly a 40% run in the stock. Any call option would have done very well in that environment. That was a 30-day trade. So we need to think about that as we explore the world of which options do I go after. And so let's talk about that. Well, first off, the thing is we don't know exactly how long the run's going to be. So what we need to do is make sure that we don't expose ourselves to too much time decay. So let's give ourselves at least 60 days of time, maybe 90 days of time. We'll start with buying 60-day options. Use in-the-money options. This is one strategy. Use in-the-money options with a delta of 70 to 80, somewhere in that range. You can see the delta listed in the option tables. You probably know how to do that. If not, just watch the videos. Buy the option in the money, delta 70, 80. And what that does for you is squeeze out the time value in the options, making the option more akin to the actual stock price. So the option behaves a lot like stock. So it's like a surrogate to the stock. Use in-the-money options to accomplish that. Squeeze out the time value. And then in the event that you get down to 2 weeks to expiration, then consider selling the option you have and buying the exact same strike price in the following month to give yourself a little more time to be right. All right, so just quickly in summary, step one is to find the big moving stocks. You do that with the S&P 500. You select highest average true range, and then you simply click search. When the result comes back, you take the top 100 of those stocks, the top 100 biggest movers, and then you pop them into My Stock List, and you click replace. My Stock List will be used in step two, which is to detect the 1030 crosses. Again, make sure that you click Show Wizard Criteria if you don't have them already, and make sure that you have a 10 and a 30 in the short moving and the long moving average respectively. If you're looking, again, make sure you click My Stock List. That's really critical. And then if you happen to be looking for bullish, make sure you click Least Days Since Latest Bullish Crossover if you want to look for bearish. Right now in this market, you might choose to do that. Click that button, but in this video I use bullish, so pick the one you like. You can play with the others, and if you want to learn more, click the help button and you can find out more. But those are the ones I would suggest. Lastly, click the search button, and then you're off to the races. All right, that's the 1030 crossover system. I hope you enjoyed it, and I will see you next week.